Hello, Grant.
Hello, good morning.
I'm Christina Marakis with LP2 Realty. I've got Grant Goad with Statewide Mortgage. And today's topic is a good one because this is a step that a lot of people want to miss. We all have a love-hate relationship with Zillow. And one of the things that I always saw when I worked with Zillow buyers is they wanted to skip this crucial piece, and that's the pre-approval. So people seem to think, oh, let's go home shopping. Let's not worry about it. And then and then I'll talk to my lender. Well, it's kind of like going shopping for a prom dress when you don't really know what your parents' budget is. You get excited about that prom dress, and you know what? You start crying because you can't afford that prom dress. So we don't want you to miss any steps. So today, we're going to talk about the 10 steps or the 10 questions, I should say, about what you need to ask your lender before you go out shopping because we don't want any window shoppers. We want to help you get to the finish line and be able to get to that closing table on that home of your dreams. So, welcome, Grant.
Yeah, thanks. I'm excited to hear about these, and yeah, hopefully these questions can help anybody that's out there kind of kicking the tires on it and ready to start looking at real estate. Love to help out.
Yeah, so I did not pose these questions to Grant beforehand.
I'm a little
So,
nervous. Yeah.
so he's like, what are these questions Christy's going to ask?
Yeah.
And you know what? Grant knows what he's doing. He's seasoned. So these questions are going to be a no-brainer for him. So,
Find out.
yeah, and we've talked about some of these questions, a lot of these questions already in
Sure.
previous podcasts. So if you want to hear more about them, just check out some of our previous podcasts. But the first question is going to be, remember, these are questions you need to ask your lender or us or Grant before you go out shopping for a new home. So, what is the difference between pre-qualification and pre-approval? This one's a big one for me as well from some of my buyers.
Yeah, this is a big one. So, pre-qualification and pre-approval, they sound to most people very similar, right? In the real estate world, they have very distinct meanings. Pre-qualification essentially means on, you know, by answering a few questions and you typing in an answer to those questions, can we theoretically qualify you for a home purchase based on that specific set of questions that you answer? So, like, for instance, do you have a job? Yes. Do you make this much money? Yes, I do. What's your budget? This is my budget. Okay, yeah, you could pre-qualify for a house. It's basically just like the first filter. And honestly, that really holds no weight, right, to much. A pre-approval is a little bit extra. It's a step where you actually fill out an application with a lender, with me or another lender, and we actually review your credit report. We actually review documentation, not just stated what's on your application, but actually review your income documents and to see, okay, we actually can see your monthly obligations. We can see how much money you're coming in. We see how much money you have in the bank. With bank statements and other forms of documentations, we truly can see, okay, you are pre-approved, subject to underwriting of this loan. You've been reviewed, you've been counseled by a loan officer, a licensed loan officer. You're officially pre-approved to purchase a home at this purchase price. So a lot more involved with the pre-approval than pre-qual. A simple, few answers and a checkbox question on Zillow or another website can get you pre-qualified for a loan, and they might even generate a letter. But really, when you're out going there and making offers with Christie or another real estate agent, pretty much any listing or a listing agent's going to want to see a pre-approval letter to know a lender's verified your income, verified your assets, and verified that credit report. So a lot more involved with pre-approval.
Yeah, and there are some big names in the mortgage world that you see on commercials and on social media, and they make it sound so super. So, I think the pre-approval process is simple, but they
Yes.
make it seem to be like super simple. Like all you have to
Right.
do is just click these buttons.
Mhm.
And a lot of people don't realize they go to their realtor and they say, yeah, I'm ready to shop. And we look at it and go, this is only a pre-qualification. This isn't going to hold up in a multiple offer situation, isn't going to
Right.
hold up when you produce it with your offer to the listing agent. So, it's more in depth. Just remember, folks, it's just more in depth and it
Yes.
gets you one step closer to being able to get to your home purchase. So it
Absolutely.
is really important to have that pre-approval. And on the listing side too, if you're a seller and you want to accept an offer, you want to see that pre-approval versus just the pre-qualification.
Correct. Correct.
Okay, so our next question is, what documents are required to get that pre-approval? So I
Mm.
always try to set the stage. If
Yeah.
I do have a buyer coming through that isn't pre-approved yet, I say, here are the things I think that Grant is going to ask you to produce for him in the process. So what does that look like just for the average,
Mhm.
just the average person who is employed?
Yeah, so the average employed person, let's say you're not self-employed, you work for a company, you receive a W-2 at the end of the year that summarizes your income. That's one of those documents that we will need. So we want a 2-year history right off the bat. That's what we look for in the mortgage world, is a 2-year history. And to verify some of that income, show us the W-2s that you received over the last 2 years. Those are usually very accessible. Most employers have those stored electronically for you, or they send them to you electronically in mid to late January. This year, you've already gotten yours, right, to prepare for taxes. So you got your W-2s. The other thing is your recent pay stubs. Some programs we need 30 days of pay stubs. Conventional loans sometimes we just one pay stub. So the most recent pay stub that's a snapshot showing the hours that you work. We really like to see the breakdown of your pay. You can say you make $100,000, but how is that income derived? Is it base income? Is it overtime? Is there bonus or commission income? We want to see that broken down on a pay stub as a loan officer to see really upfront, okay, what type of income do you actually receive? W-2s, pay stubs, and then to verify assets, simple bank statement, right? Again, most can be digitally pulled from an online portal or a mobile app. Most, pretty much all financial institutions they have digital versions of all their statements. So you typically don't have to go into a bank to get those. So yeah, all pages of a bank statement. And that's the other thing I'll harp on is all pages, right? It's not just, okay, here is the summary of my accounts that shows how much money I have. That doesn't really tell the whole story. So be sure whenever you're sending bank statements or uploading these documents that if it's numbered, we need it. Even if everything is blank on that page and at the bottom there's just a number two, we still need that. We still need that page out of your bank statement. So, W-2s, pay stubs, bank statements, and throw in your driver's license in there too, just so we can verify the spelling of your name. As long as we have all those up front, that'll help us later down the road spelling your name and verifying your address and birth date to when we pull your credit. So those are the key documents. And if you're self-employed, we will always ask for your tax returns, right? For our self-employed folks, your income's, derived a little bit different than someone that's employed at a company. You'll prepare your own tax returns. You'll have an accountant prepare your tax returns. We have to see those and how you report your income to verify it for mortgage guidelines. So just know if you are self-employed, always have those tax returns handy or give us the ability to reach out to your accountant. We're happy to do that as long as you give us permission. We can take you out of the process having to get those documents. But yeah, tax returns, W-2s, bank statements, pay stubs, driver's license. That's pretty much all we'll need up front to get you a solid pre-approval.
So are you saying with bank statements, are you just saying the last one that happened or
Yeah, typically we need 2 months, right?
okay.
When I'm having those conversations, sometimes, we may not need to see all their assets, just the ones that they need to use for funds for closing, right? So I'll have that conversation with them up front, but I would always bank on having, no pun intended, bank on having two of the most recent 2 months of bank statements, a full 60 days to see. That's typically the seasoning period that underwriters will want to see to make sure there's no unusual large deposits, no cash deposits in there, expenses that aren't showing on your credit report, right? That will be flagged too if they see with reoccurring withdrawals going somewhere that's not on your credit report or doesn't match up. we'll need to explain that too. So about a 2 month period is generally fine for the initial pre-approval process.
And don't get upset when Grant asks you through the
Correct.
transaction that you're going to have to produce your
Yeah.
newest bank statement. So
Yes. Yeah.
just keep that on hand as you're going through the transaction, that it's going to have to be updated. And a lot of the stuff might have to be updated again. And you
Correct.
may, as the buyer, feel frustrated because I just produced all this
Yeah.
stuff. Well, guess
Yeah.
what? We're in another month.
It's a
So
fine line, right? Up front, we try not to be overwhelming with the documentation, but we do need enough to make sure you're set up for success when you go to purchase this home. So a little bit of extra work, getting us another statement here or there can really help, in the long run. So absolutely, thank you for mentioning that.
yeah. So this is my favorite. Number three is, does a pre-approval letter mean that it's guaranteed? Like, yeah, I got pre-approved. So yes, I get 100% to buy this house that I just picked out.
Well, in the perfect world, we've done enough homework, right? We've reviewed it. I, as a loan officer, have taken the time to review your income, to review mortgage guidelines, and to make sure you're set up for success. So when we send out pre-approvals, we do expect this loan is going, to not have any issues. However, there are things that may not be noticed directly up front. It's my job to ask the questions to make sure there's no surprises going. So I do want clients to feel comfortable. Here at Statewide, we do have an extra process that we're able to do is actually it's called TBD underwriting. So if you are concerned, or if I feel like we need a little bit more clarification on things, we do have the ability to not just pre-approve you, but we can actually send your file into an underwriter, an actual human, to review your file and give us an approval. We'll check off the income, confirm assets, confirm credit. If there's anything there that I might need a second set of eyes on, they can actually review that for you before you even go to contract on a house. So if there is any, issues there, if we notice something that may just need a little bit more clarification, we can always do that. But it's not the end. It's, obviously what you're looking for at the very final thing is my loan is clear to close, right? There's lots of steps to take to get there. The mortgage pre-approval process is one of them. The full underwriting process is another. And then obviously reviewing the actual property that you're purchasing. That's where Christy steps in and makes sure the property's in good shape. You do the inspections. All that has to be approved as well. So,
Yeah, so through that approval, you have to have the appraisal. So
mhm.
the house has to appraise. You have to be able to get insurance for the home. And another one that some people or a lot of people may overlook is some HOAs require you to be approved to move into the community.
Right.
So it's not super common, more so in condo situations or 55 plus communities.
Mhm.
But that is something too. You get a HOA, what we call a rider that goes along with a contract. And on that second page, it states if this community requires you to be approved prior to moving into the community. So these are some, not all of them, but these are some of the steps that we have to go through to be able to get you approved
Sure.
for this loan. It all kind of
All
fits
works
together
together.
like a
Mhm.
puzzle,
It
right?
does. Yep.
Okay. So number four is, and we've touched on this one previously, but how long does that pre-approval last? So if I started looking at homes last September and I took a break through the holiday season and now I'm back on that horse and I'm
Yeah.
ready to start shopping again, what does that mean to the buyer?
Yeah. So exact time frame can depend on the situation, but a credit report lasts for 120 days, right? When I pull your credit, that credit report is good for 120 days. Now that means by the end of the transaction, the close date, it's got to be within that 120 days. So let's say, you wait 3 months or 3.5 months, we're going to need to repull your credit. So technically your pre-approval has kind of expired by then. The other things that can affect your pre-approval is if you've changed your circumstances. Did you quit your job? Did you get, a pay increase or decrease? Or sorry, if you get a decrease or decreased hours, um, those things can affect your pre-approval. So, expiration date, I'll always work off the credit report, right? I'm fine with keeping that pre-approval out there as long as the credit's good, and you haven't made any changes. So, always, if you take a break, tell your loan officer, tell your realtor, hey, I'm not shopping right now. I just want to take a break. I don't want to deal with this for 2 more months. That's fine. Let's have a phone call, right? A simple, quick phone call can tell me if
Sure.
that pre-approval is actually still active, or oh, you changed jobs. Oh, you bought a new car. Like let's talk a little bit. Let's have a conversation, and then I can always send you a new pre-approval letter with the updated information. So
Because that goes back to our one of our very first videos that we did or podcasts we did about not keeping secrets with your
yeah,
realtor
simple
and your
phone call.
lender.
Yeah,
Just have the conversation.
right.
Just lay it out. We're not going
Yep.
to judge.
Nope. No.
Not at
It
all. Not at
the
all.
more the
But
more we know, it gives us the more ability to make adjustments, to find a solution if it wasn't a bad credit event. Let's say you did have to buy a new car and you've got a big car payment now. Well, let's look at it. I mean, you might still be pre-approved. Let's see if it works in your budget. Let's see what we need to do to get around it, and see how it affected your credit. So as long as we're having those conversations, we can really re-review your file within a couple days, depending on the event, and to get you an updated pre-approval.
so that's a great segue into our next question. So the next question is, what kind of credit score will I need
Mhm.
to even jump into the possibility of purchasing a home?
Yeah, so a couple different programs have different minimums, right? Your standard conventional loan, which you've probably seen, advertised a lot. The minimum is going to be 620. FHA and some other programs will actually go down to 580. So VA will allow a little bit lower credit score. FHA will allow a little bit lower credit score. So, if 580 is kind of like the baseline, but even at 580, obviously there's going to have to be some other compensating factors. So really we're shooting for that 620. That's a great goal to have. It opens up a range of products to you to qualify for. So, 580 is bare minimum for guidelines sake. 620 is kind of our where we want to aim for typically.
Yeah. And so, side note question, when you work with a buyer, can you do a credit pull as a soft pull, or does it always have to be a hard pull when you first start working with a buyer?
Yeah, you can do soft pulls. In our world, if you're truly ready to buy, let's go ahead and do the hard pull. There's really no, in my opinion, a reason not to do it. Credit reports are very expensive now. If you haven't seen it, I mean, in the mortgage world, we talk about it because it's our expenses, right? But they're very expensive, so we don't want to re-pull it when we don't need to. But we're going to have the hard pull anyway. If you're serious about home shopping, you're serious about getting pre-approved, then let's go ahead and get the hard pull out of the way now. We're done with it. Typically, it doesn't affect your score significantly. Uh, as long as you're not actively out there shopping for cars and credit cards at the same time you're mortgage shopping, it typically doesn't have much of effect to your score. So let's have a conversation before, as if you say, "Hey, I know I'm right on the edge of 580 or whatever. Let's have a conversation and we can look at your specific situation. But if you're confident in your credit score, we simply just need to do a verification for pre-approval. Let's go ahead and do that hard pull. That way we're set up for success when you go under contract.
Yeah, and I swear I gave you these questions ahead of time and you prepped it. I swear you knew.
I didn't look.
But another great segue is how you're talking about cars
Mhm.
and don't go out shopping and all
Mhm.
those things. Well, that's part of your debt to income.
Sure.
So our question number 6 is, how does debt to income ratio affect my approval amount?
Yeah, so this is one of the key factors we look at, right? Credit scores is there, but your debt to income is basically your monthly obligations. So think minimum credit card payments, your auto loans, student loans, housing, your if you have a current mortgage somewhere else or another property, those things that report on your credit over your total qualified income, right? That's what we use for what's called debt to income ratio. So ideally, we want that under 50%. So some programs allow over 50%, same as the lower credit programs. FHA, VA will allow you to go a little bit over 50%. But if you are doing a conventional loan, we want to make sure all of your monthly obligations, including your new mortgage payment that you're trying to get pre-approved for is all under that 50%. So that way, 50% of your gross income is not going, is below your monthly obligations. So that's what we're looking for as far as debt to income
Yeah,
in
and
a
I want
general
to I
case.
want to stress that point for our listeners is you said the 50% has to include whatever that new monthly mortgage
Correct.
payment is.
That's
So
correct. Yeah.
factor that in, have the conversation with your realtor, and that realtor should say to you, what do you feel comfortable in paying in a monthly
Correct.
mortgage payment? And then you can sit down and figure out, what that looks like
What that looks
before
like.
even
Yeah.
talking to you so that you can feel comfortable with that payment.
Yeah, and your max, what I qualify you for, if it's below 50%, you might get the green light and say, yeah, you're pre-approved for that $400,000 house, but your personal budget might be a $300,000 house because the monthly payment is way too high at 400,000. So, that's something for us to talk about to make sure, even though, yeah, I can qualify you up to that max ratio, if it's not comfortable for you at that range, if that's gonna, hurt you in other areas of life, if you have other major expenses in your life every month that don't show up on credit that I don't see, like I don't know about that. So it's always important to say, not just what am I max pre-approved for, but what is actually every single month, what am I comfortable bringing and paying each month for my housing expense?
That's so important for people
Yeah.
to really understand that.
Yes.
Okay, so our next two questions, you've already touched on it,
Okay.
but I'm going to make it official by asking the
Perfect.
question. So, number seven, can the pre-approval amount change at a later time? So, you're talking about 120 days. So, what about after 90 days? Something like that. Can it change?
Yeah, so really the pre-approval exact amount, it's kind of funny because like I said, we work off debt to income, which basically is the monthly expense. So truly, as long as nothing changes on your end, no income has changed, you haven't lost funds to bring to closing. Like if any of that changes, there's really no reason why that amount would change. But it could change depending on the property you're looking at. So if you're looking at a single family home at a certain price range, that's not in an HOA, as opposed to a condo that has a severely high HOA. Those things can really affect your budget, or depending on what area you're purchasing in, the taxes. So the tax bill can affect your actual pre-approval amount. So it's really based on property, right? So in the beginning, we will give you a generic pre-approval letter. We'll give you a generic estimate saying, hey, this is kind of what we're seeing in your price range, what a monthly payment would look like, and what you're pre-approved for. It's important though, when you go shopping with Christy, your realtor, when you have a specific property to send it to me. So I can generate the numbers, we can look at the taxes, we can call an insurance agent to get a quote for insurance, and we can confirm HOAs, CDDs, all those fun things to be sure that that specific property fits into that generic setup that we had previously on your pre-approval. So if nothing changes, no, it shouldn't change, but it will change based on the property. Hopefully that made sense.
Yeah, absolutely. And that's a great reminder of people to go listen to our last video, last podcast, because we talked about that specifically,
Mhm.
as well as what goes into factoring that payment and that pre-approval
Right.
letter. So, okay, so the next question is, and there again, you've touched on it already, but just to remind folks, will getting pre-approved will getting pre-approval affect my credit score?
Like I said before, generally not very much to be concerned about, right? There's always a possibility it decreases a couple points by doing the hard pull, but in general, no, it's not going to have much of an effect if you're house shopping. Now, the other thing to keep in mind, I mentioned it before, if you're actively shopping for a car and your car dealerships that you're shopping for pull your credit 50 times with all of their lenders, and you also try to open up a new credit card, a Discover, airline credit card to get points and all that stuff. If you're doing all of that at the same time, and then we pull your housing credit as well, your score will probably dip. So, that's something to keep in mind. But generally, if you're serious about home shopping, you haven't been super active on inquiring about your credit a lot. Generally, it's not going to affect it very much. It could have some effect, but typically no, not much, not enough to worry about.
Yeah, exactly. I think a lot of people in the process get all uptight about that,
Yeah.
you know.
Hmm.
But
Yeah.
if you're serious, you're ready to purchase,
Yeah.
you haven't done anything crazy,
It's a
like
necessary step we got to
yeah,
get done. So we got to
exactly.
check the credit.
Okay. And we're getting close to the finish line. We're at number 9 already. So what monthly mortgage payment does the pre-approval assume? You've already touched on this as well. So um, about you've added the property tax or talked about the property
Right. Yeah.
tax, but
So
what other things does it include?
yeah, what does it make up? So yeah, we basically pre-approve you based on a total payment, which includes your uh, principal and interest. So we'll do a rough estimate on an interest rate. So we'll come up with your loan terms whenever we have that initial conversation. If it's a 30-year fixed mortgage at a 6% interest rate, with a 400,000 purchase price with 20% down, that's how we're going to structure the pre-approval, right? So we'll have your principal and interest payment, your monthly taxes, your monthly insurance, and then another piece is the HOA dues will be part of this pre-approval. The HOAs will not be collected after you close with this mortgage payment. But if you escrow your taxes and insurance, then we will show that on your pre-approval, and we'll make sure we look at the county websites here, especially here in Florida. For new construction properties, we'll be sure that those tax bills are accurate because a lot of times new construction hasn't been assessed by the county. So what we'll do up front before we pre-approve for a house is we'll pull a property tax estimator from the county to confirm those tax amounts. So that way you're set up and we don't pre-approve you with, $100 in property taxes when really it's 500 a month. So those items make up the total qualifying monthly payment.
Okay. And so I'm going to speak for you right now, but we
Yep.
always tell the buyers is once you get that pre-approval, don't go shopping for furniture, for a new
Mhm.
car. Like it's not it's a good sign that you're gonna get to the finish line with this new house, but you've got to be on a budget. You got to be on a
Mhm.
financial diet
Right.
during the transaction. So that leads us to question number 10
Okay.
about what could cause my loan to be denied after the approval,
Mhm.
like purchasing a new car,
Yeah, that we'll start there. Yeah.
buying
So
furniture.
yeah, making large purchases with credit, right? So you can make large purchases as long as you have enough funds with cash all you want, right? I'm not going to control your life there. And you can continue to use your credit cards. That's fine. The big things we're talking about is those car loans, right? Those sneaky car loans where you go and, you know, that will affect if you get a new car loan for $30,000 and it's a $700 monthly payment, that's going to affect your pre-approval and your approval, especially if we don't know about it up front. Not paying your loans, the ones that we've pre-approved you on, and then you miss payments, that could show up, right, when we do our final credit check. So always be sure to keep paying your monthly obligations on time. So you might be pre-approved and then it takes 3 months to find a house, but you've missed two payments from your auto loan, and that could affect it. Um, so with credit specifically, yeah, make your payments on time. Don't open new credit. The other things to think about is your employment. Not just if you change jobs, not just if you lose jobs, but also think, are you reducing hours, right? That's something we will have to look at with mortgage pre-approval. Lots of income now. We're seeing lots of variable income, lots of side jobs, lots of working two jobs. In our economy today, it's kind of necessary for a lot of families. So that's great. But for us to use it for mortgage, approval, we have to see consistency. So if in the beginning we see good 40 hours every single week, but then 3 months later we get pay stubs from you and it shows 20 hours every week, that's showing us and our underwriters that you're kind of scaling back to that job, and maybe it's a part-time job now and it's not full-time anymore, so
Yeah.
we can't use that income. So that's one sneaky thing that's not a lot of times thought about is actually reducing hours. So maintaining your current, however we pre-approved you, maintaining that current work schedule. So
So
those are the big.
touch on real quick before we wrap up
Mhm.
about unexplained sums of money that
Yeah. Yes.
mysteriously pop
Right.
up, which I wish this would happen to me. Money just
Yeah.
pops up in
Magical
my
money
checking
pops up.
account.
Yeah, that would be amazing. Yeah. So the rule of thumb is it's got to have a reason, right? We have to have a legitimate reason to see a large deposit in your account. It can't just be cash, right? The cash just can't just be hoarded under your bed and then you bring the cash to closing to the title company. They're not going to accept it. So if we see a large deposit, it's not always necessarily a deal breaker. It has to make sense, right? Was that a gift from somebody? Did you sell an item? Did you sell a car and you deposited? That's fine, but let's document that. We'll have to document the sale, prove that you sold it for that amount, and show where that money came from. Was it a bonus? It could be a variety of things in a variety of situations. Or, do you have a side hustle where you got paid for something? That's fine. Just make it known, right? It just has to make sense. It has to have a reason for where it came from. It has to be explained. That's the main reason. And it's really for all of our benefit, right? In our country, in our economy. It's to make sure that the money that's being moved around is legitimate, right? It's just to prevent that, to prevent the bad eggs from doing bad things. So unfortunately, we have to document all the good eggs have to do all the documentation. So it's really not to harp on you. It's not to be nosy. It's simply let's make sense of this. Let's give it a reason. Okay, that's essentially it.
Yeah, so if you keep a lot of large sums of money in the backyard in a coffee can, like they did with my great grandmother, that
Right.
money has to go into your account
Yeah.
before you get
Yeah.
to the closing table. You can't just show up with that tin can, plop it
Right.
on the table, and say, I'm ready to close. It's
Yeah.
got to be documented prior to the
Yeah.
closing date.
We
So
need to see
that,
that in there for, make sure it's not within that 2 month, we talked about previously about showing those bank statements, make sure that deposit or whatever it is not within that 2 months. So that way, the mortgage underwriters can see that, okay, that money's been seasoned for a while and it's got a reason to be in there. So,
yeah, and furniture isn't cheap anymore. So even if you pay cash for your new bedroom suit, like
mhm.
make sure that for a large sum of money, that you're going to run that past grant before
Sure. Yeah.
that $10,000 bedroom suit.
Or just wait to go shopping till after we close. That's a it's a
Yes.
good thing to get, good habit to take is let's wait for those purchases till after anyway.
Yeah.
So, yeah.
Go pick it
Pick
out
it out after.
and have
Yeah.
it ready,
Yeah.
and then
That's right.
go celebrate after closing when you have the
Yeah.
keys in your hand, and then go make that payment.
Yeah, for sure.
Yeah, exactly. And another thing, this has happened to me with a buyer. They said, well, we're closing. So I just wanted you to know I didn't pay last month's mortgage payment because I knew we were closing
Hmm.
so close to when it was due.
All right.
And guess what?
Yep.
They
Comes
got
due.
denied at the last minute to
Yeah.
purchase the home. So pay
Yep. Keep
your
paying all those
bills.
monthly obligations. Yep.
Yeah.
Absolutely.
Yeah. Thank you so much.
Yeah, it was fun.
And I'll have your information in the comments below. Until next time.